wouldn't it necessarily affect the credit markets if you extend $500 billion in credit to anybody?
We are lending to all U.S. Financial institutions in exactly the same way.
Well, look at the next page. The very next page has the U.S. dollar nominal exchange rate, which shows a 20% increase in the U.S. dollar nominal exchange rate at exactly the same time that you were handing out $500 billion to foreigners. You think that's a coincidence?
Yes.
The dollar's too strong against other currencies, and inflation is non-existent. Where is he wrong?
Well, first of all, he's wrong in even discussing the issue. The Federal Reserve is a very professional outfit. They know more about how the economy is functioning, how it affects the money markets, and the interest rate structure far more than he does.
Have you conducted any investigation or auditing of the losses that the Federal Reserve has experienced on its lending since last September?
We're still in the process of conducting that review. Until we actually, go out and gather the information, I'm not in a position to really respond to the specific question.
So are you telling me that nobody at the Federal Reserve is keeping track on a regular basis of the losses that it incurs on what is now a $2 trillion portfolio?
I don't know if you're telling me that you're mentioning that there's losses. I'm just saying that we're not, until we actually look at the program and have the information, we are not in a position to say whether there are losses or to respond in any other way to that particular.
Mr. Chairman, my time is up, but I have to tell you honestly, I am shocked to find out that nobody at the Federal Reserve, including the Inspector General, is keeping track of this. All right, now the Federal Reserve has given $1 trillion out. $1 trillion in the past 12 months. That's how much the increase in its assets and liabilities in the balance sheet has been. Who got the money? This, by the way, is a question sent to me by Beatrice Delgado. She just wants to know who got the money. Will you tell me?
So the most of the increase in our balance sheet has been the purchase of U.S. government securities and the purchase of agency guaranteed securities in the open market from market participants broadly.
And what about the rest of it?
Time has expired.
All right, thank you, Mr. Chairman. But I really think we need answers to these questions, and the only way to get answers to these questions is to have the GAO audit the Federal Reserve. Thank you very much. I understand that, but we're talking about events that started unfolding 8 months ago. Have you reached any conclusions about the Fed expanding its balance sheet by over $1 trillion since last September?
We have not yet reached any conclusions.
Do you know who received that money?
We're in the process right now of doing our review, and
Right, but you're the Inspector General. My question to you specifically is, do you know who received that $1 trillion plus that the Fed extended and put on its balance sheet since last September? Do you know the identity of the recipients?
I do not know. We have not looked at that specific area.
So who got the money?
To financial institutions in Europe and other countries?
Which ones?
I don't know.
$500 billion, and you don't know who got the money?
The loan went to the loans go to the central banks, and they then put them out to their institutions to try to bring down short-term interest rates in dollar markets around the world.
Well, let's start with which central banks got the money.
There are 14 of them, which are listed in our. I'm sure they're listed in here somewhere.
The Federal Reserve ever tried to manipulate the U.S. stock market?
No, sir. Not that I'm aware of.
Not that you're aware of, but you're the attorney, right?
That's right.
So you might not even know, right?
I would expect to know if there were something like that being done. I'm not aware of that at all.
And if you did know, you'd be bound by attorney-client privilege, and you wouldn't be able to tell us, right?
We are being very aggressive, and I think our chairman, Jay Powell, has learned from the experience of 2008. We're moving much faster than we moved in 2008. We're being more aggressive. Is there more we can do? Yes. Is there more we may end up doing? Yes. But I think we're being very aggressive, and I think that's the right thing.
Can you characterize everything that the Fed has done this past week as essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that?
There is no end to our ability to do that.
What about Bloomberg's report that there are trillions of dollars in off-balance sheets transactions that the Federal Reserve has entered into since last September? Are you familiar with those off-balance sheet transactions?
You know, I think it may be important at this point, too, just to bring up a certain aspect related to our jurisdiction. And just to clarify perhaps some of my earlier comments, we are the Inspector General for the Board of Governors, and we have direct oversight over board programs and operations, and are also able to look at board delegated functions to the reserve banks, as well as the board's oversight and supervision of the reserve banks. We do not have jurisdiction to directly go out and audit reserve bank activities specifically.
What is the proper relationship, what should be the proper relationship between a chairman of the Fed and a president of the United States?
Well, first of all, the Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take. So long as that is in place and there is no evidence that the administration or the Congress or anybody else is requesting that we do things other than what we think is the appropriate thing, then what the relationships are don't frankly matter.